Make sure buying a small business is a sound investment decision from businessfirstfamily.com. If you're a savvy entrepreneur, you know the best way to get into owning a business is not to start one, but to buy one. Find out how to buy a small business in this video. We'll teach you the crucial buying strategies that will enable you to choose the best small business to invest in. Buying a small business is a more convenient way of entering entrepreneurship than starting a new business from scratch. Since the small business is already running and generating revenues, you can begin operations immediately after the sale. Moreover, existing inventory, account receivables, and established customers help maintain cash flow, making it easier to earn profits. Nonetheless, due diligence must be performed to ensure that you're buying the right business. To simplify the buying process, this video discusses 5 important considerations before buying a small business. Investigate seller's objective. Before buying a small business, investigating the existing owner's reason for selling is very important. If the previous owner is selling to retire, then there's a high probability that the business is still capable of earning profit. However, sometimes business owners sell their business to raise money for personal requirements, bankruptcy, or due to the fear of rising competition. Analyzing their true motivation behind selling indicates the business's true worth. So be sure this is a part of your buying process. Find out owner's income. In addition to finding out why the owner is selling the business, you may want to find out the owner's discretionary income. The ODI is the amount of money the owner actually makes after paying out employees and paying for all other costs associated with the business. If you're unhappy with the amount, or the amount has been in a decline in recent years, this is not the best business to purchase. Remember the importance of finding out the owner's discretionary income before you commit to a purchase. Research the business. Once you're clear about the seller's motive, now it's time to research the business itself. While researching a business, find out its number of competitors, current market reputation, and potential for growth. Evaluate if the business belongs to a healthy and growing industry. Talking to customers and suppliers will provide valuable insight about how the business is performing. Thorough research enables you to make well-informed decisions about buying the small business of your choice. Ask for employee documents. Before you buy a business, you want to be sure to request every piece of employee documentation they have. This should include organizational charts, employee handbooks, employee agreements, and wage and salary information. If applicable, you should also ask for any benefits plans, non-compete agreements, or confidentiality agreements. Check to see if any existing employee policies put the business at risk for lawsuits. Also, try to find out if any ongoing employee grievances exist. A good manager makes a difference, but this is still a situation you'll want to avoid. This will help to prepare you for anything that may come in the future if you do decide to buy the business. Check business documents. Thoroughly checking business documents is the next step towards completing the due diligence process. First off, go through organizational documents like partnership agreements, articles of incorporation, and business certificates to verify the business's credibility. Then, find out if there's any outstanding tax liability. Examining all relevant business documents will reveal whether buying this business will be profitable. Evaluate revenue generation. Steady revenue generation indicates positive cash flow. When purchasing a business, evaluating how much revenue it generates is a top priority. Start by checking the last 3 years' worth of financial statements to determine the present financial condition. While reviewing the balance sheet, focus on the last full audit report. In absence of a recent audit report, you can request for the owner to get one done. A successful audit will prove profitability. Additionally, a look at inventory will tell you if products are getting sold regularly or not. The value of a business depends on its ability to generate income, making it a worthwhile investment. Determine total asset value. The cost of buying a small business depends largely on its assets. By determining the total asset value, you can gain a better position to negotiate prices with the owner. The tangible assets of a business include equipment, store location, lease, inventory products, and patents. But make sure each of these assets is free from debts that may pass on to you with the ownership. Calculating asset value can enable buyers like you to get a favorable sale price. To purchase a small business, performing comprehensive due diligence is required for a successful deal. Additionally, you should examine business licenses and tax receipts to make sure that it's legitimate. Finally, calculate total asset worth to successfully negotiate a buying price. What other concerns do you have when buying a small business? Share them with us in the comments below. If you found this video helpful, remember to like and subscribe to Business First Family to show your support. Then, visit businessfirstfamily.com for answers to all your other business and investing questions.